Well, good evening, ladies and gentlemen. Thanks for joining me on this weekend market update. What I'm going to provide you with in this video is our top 12 individual trade analysis list. This list is something which we cover over the weekends in our Pivot Point Pro analysis class, but for now, what I'm going to do is present you with our individual entries, targets, and stops for the following 12 trades. What we'll do is we'll start with Apple, as you can see right here, and we'll progress and transition our way down to XOM. This, of course, is valid through to trading beginning Monday, the 28th of April, 2014. So what I'm going to do is begin with Apple. Now, Apple has had a fantastic earnings gap. You can see that obviously the market has welcomed the earnings as such, and it has gapped up about $30 as of Thursday. What it did, it left us with what we call a doji candlestick. That was Thursday's trading session, and as of Friday, we have a little bit of a bullish engulfing candlestick pattern. Now, this two pieces of trade analysis and trading data are very, very bullish. However, the thing is we're running into a resistance level at 577.74. So what we need to do as disciplined traders is set our trades up at about 582.63 to enter into Apple in the event that it decides to break out and continue bullish. What the Japanese say is to trade in the direction, of the open window. Now, the open window is bullish. However, with the market looking so bearish, if you want to go back and actually have a look at the previous video dated market update, 27th of April, you can see that the market in and of itself is looking very, very bearish, and the majority of our top 12 individual trade analysis are going to be bearish in this video. So Apple does also have the chance, based on this information, to actually come down and fill this open gap. So what we have here is a bi-directional trade. What we mean by bi-directional is that we have both a bullish and also a bearish entry. Now, the bearish entry here is 558.32. If this does trigger, we get a close and a continuation below. We're looking for trades down to the area in 532.40. This will actually close this open window, which will likely happen in the event that the market decides to continue bearish for the week beginning, of course, Monday the 28th of April. So Apple is a very neutral trade setup. By definition and textbook, it should be bullish. However, we are running into resistance, and there's also the chance that we could actually fill this gap, which could be an exhaustion gap, which in and of itself would be very, very bearish. Having a look at Amazon anyway. Now, Amazon is a completely different basket. What we have is another earnings gap, but instead of it being bullish, it's obviously quite bearish. You can see the volume coming into Amazon. We did get a very significant open window gap to the downside. Now, again, the Japanese say trade in the direction of the open window. So what we have here is a 301.40 bearish entry trading down to 284.40. That is the bearish setup for Amazon. I am really liking this individual trade setup. It is one of my favorites for the week ahead. Please keep an eye on Amazon. There's a fantastic risk reward setup on Amazon, and it does justify, of course, setting this up in your own trading account. So again, I'm not telling you to do anything in these videos. These are just my own personal critiques and criticisms of the market and what look to be good trades for the week ahead. So that is Amazon. Again, the trade and trend is very, very bearish. You can see we've actually established a lower high. We've come back and we've filled or tried to fill the open window. We've been rejected, and as such, we're just simply breaking down below all of these support levels. Now, we do have a bullish trend which is breaking down as we speak. So again, if this does or cannot hold as of Monday, Tuesday, or Wednesday, look for a quick move down to 284.40. It could be a very, very nice trade for the week ahead. Moving on to AXP. AXP reported its earnings. Earnings were lackluster. There was no gap up and no gap down, so it is the complete opposite to that of Apple and Amazon. We've had both a bullish gap up, a bearish gap down, and now we've had our third stock on the list, which has done absolutely nothing. Now, this has been, or have been very, very bearish anyway on AXP. Really since the beginning of 2014, really since we've had this exhaustion gap fill, which could be an Apple type trade. We've come up and we've hit resistance. We've been rejected by some incredibly bearish candlestick patterns. We've also had some very strong divergence taking place across our MACD and also price. You can see that we're actually diverging away from one another. This is really a textbook bearish trade setting up. If we get a rejection at the 10, the 20, and the 50 here, you can see my entries 84.99, 83.75, and 82.35. In orange, you can see my targets. We've got 1, 2, and 3. Ultimately down here at number 4, which is $71.43. That, of course, is going to take some time, but I can start to see AXP beginning to roll over right at this major pivot point. So keep an eye on AXP. Baidu again looks incredibly bearish. Now you might be asking, well, how is this bearish? The thing is, earnings was released. We did have a spinning top candlestick, but what I want to draw your attention to is the fact that we are running into that 100 simple moving average. We are running into the 50, the 100 the 10, the 20, and the 50. And if you look at our oscillating indicators, you can see that they are approaching those overbought levels. That, coupled with the fact that we are at a very strong resistance level, which has been in effect since October 2013, you can really get the gist that Baidu is really potentially about to roll over with the market looking so weak as well. So I've got a 150.99, a 141.88 target on Baidu. No bullish trade set up until we break above these swing highs, which is going to come up about $190 a share. Very, very far away. Now, Caterpillar, I do not have enough time to explain to you as to why I'm not excited about Caterpillar this week. Out of our top 12 individual trade analysis, Caterpillar is the one this week which I'm not excited about. So if you want to learn why I'm not excited about that, come through the axioms of stocks and options. So what I'll do, I'll move into FAS. FAS has presented us with a fantastic trade setup. We did have what we call a triple top or a head and shoulders chart pattern. We did, temporarily break down below it. We have rallied up, and what has seemed to happen is that we've just retested old support as new resistance or as new selling pressure. Friday we did get that rejection, and what we have is an 86.60 bearish trade opportunity down to 81.30 as our first target, and number two, 78.33 on the bearish side, looking really, really good. Google, again, on the precipice of breaking down, very similar to the NASDAQ as an overall market. So you can see we have two entries, one at 523.50, which you would have been triggered into on Friday for those students who are in this class and are just watching this market update. We have a second here at 520.80. All right, 520.80. Targets 509, 575, and 449.30. Looking at some additional shares, HD, you can see the bidirectional trade setup on HD. Targets are in orange. I'm not going to explain the analysis. That is the bonus of being a student here at Pivot Point Trading. JPM, again, continuation entries and triggers as we move down to $51.07 a share, right? 54.89 and 53.46. 53.46 is a much more high probability trade setup compared to that of the higher priced trade entry. Netflix, again, earnings did come out. Now, again, this is very, very similar to what could happen on Apple. You get that initial spinning top candlestick, a bullish candlestick, but the gap fills very, very quickly. You see that? 3 remaining candlesticks, all tanked. We're back down at support. Now, we filled this gap over here, which was established in January, and this, pardon me, is looking incredibly bearish. Pardon me, I just had a little bit of indigestion or something, but as you can see, if I just change this to a line chart, we're getting these breaks of these multi-level support lines. So as you can see in the year 2010, 2011, as we established the top, you can see the bottom absolutely fall out on Netflix. Now, again, I'm not saying this is happening, but you can see the similarities between the two. We're at this very, very important support line at 322. If we break below this, so if we set our trigger up at 310, this could be the trade of the year for 2014 on Netflix. It could be the trade of the year for 2014 on Netflix. Very, very close to happening. The same with Google. Very excited to see how this trade plays out. We've got Starbucks again. Starbucks bullish entry at 75.92. We've got the breakdown below 69 and 67. Other than that, stay neutral, stay patient on Starbucks. And to finish with XOM, really compelling trade setup above 101.93. However, we do have earnings coming up, so it sort of kicks the trade setup to the curb until earnings is announced. It comes out and it's factored into the market very quickly. Then we can trade the ensuing gap. So thank you so much for watching this market update. If you like this video, subscribe to the channel and have a look at our website, pivotpoint-trading.com. You'll come across a lot of individual and a lot of stellar classes on trading, lays the vital foundations for profitable trading, which will get you again onto autonomous trading, which is where you want to be in the marketplace. So all the best, everyone. Give it a thumbs up, give it a share, give it a comment. I'll catch you all later. Goodbye.